What happened with Bitcoin yesterday is what you call a proper shakeout. More than $1 billion worth of longs were liquidated, leveraged longs. And it brought Bitcoin down from nearly 12,000 down to 10,500. So what's next? In this video, I want to discuss what happened yesterday and where I see Bitcoin is going to go. Also, talk about a famous bank and one of their chief analysts and how he is not only dissing Bitcoin, but also gold. I think it's reckless what he's saying. And lastly, there's a famous Bitcoin bull that thinks there's no resistance up to 28,000. Let's discuss. Let's start out looking at Bitcoin. Where is it at? Well, 11,142. So certainly better than last night's 10,500. Yes, Bitcoin, after it hit about 12,200, it started to dip drastically. And I was on my computer looking at it. It went to 11,000 and then even dipped below 10,500 before it finally found a footing and came back up. So what happened? That's what you call a proper shakeout. Basically, there was just way too many people that were utilizing leveraged longs, and this was a way to just basically get them out. And of course, there was a lot of profit taking. So that's exactly what happened. We have seen many periods before, including ones from this year, where you see a Bitcoin go up and up and up, and it just seems like it'll never come down, and boom, it comes right back down. So what happens? Well, basically, whales or a large number of people, they start taking things off the table. They start selling, and it causes a cascading effect because there's a lot of people that are longs. They start getting liquidated, and people have to panic sell. And it's like a snowball effect, and that's why you see it start coming down so fast. And eventually, when it's all caught up, that's when you start seeing recovery. So right now, I'm on the daily chart, and you do see a pretty large red candlestick. Is not the biggest deal because Bitcoin has gone up so much within the last few weeks. However, if you go down to a shorter time scale, take a look. That was one pretty significant drop within 10-minute span. That's pretty crazy, right? All right. So I mentioned that we have seen this before. And yes, we have seen many periods where this has happened. So let's take a look earlier this year, back in May, when Bitcoin went all the way up and peaked around 10,100. You could see right afterwards, Bitcoin started going down and it dropped as low as 8,500. So roughly $1,500. And it was the same thing. You saw Bitcoin start coming down really fast, and then it found a footing and it kind of recovered, and then it went sideways. So that's what it's looking like right now. So if you go back to yesterday, Bitcoin was skyrocketed up to 12,000 and then dropped, ta-da, 1,500 points. I don't think that's a coincidence. 1,500 points, and now it's recovering, and now it's probably going to head back up, and we may see some sideways movement for some time. Remember, we did go from 9,000 to 12,000 in a relatively short time. You know that it has to stop sometime to consolidate, right? And that's what we're seeing. I believe this week and possibly a few weeks after this, we're probably going to see some up and downs, but overall, maybe just hover around this 11 to 12,000 area. But maybe not. With a lot of these billionaires that are still heavily buying into Bitcoin and gold, they're afraid of inflation, so who knows? This trend may not stop. And there's an article that I want to talk about in a little bit. That's from a very famous Bitcoin bull. Most of you guys know who he is. And he thinks Bitcoin's not going to stop until 28,000. All right. So that's what happened last night with Bitcoin. What about altcoins? Altcoins certainly had a dip too, but it wasn't bad. You could see Bitcoin dominance is still at 61.1%, which means the sell-off was pretty much equal between Bitcoin and altcoins. Yes, Ethereum fell down drastically and was nearing 450-ish, and it was heading to 500. Yes, XRP also fell down. It was in a 30-cent mark. Yeah, so a lot of altcoins pulled back, but they pulled back roughly the same as Bitcoin. So altcoins is still holding well. However, if Bitcoin continues its run up, you know what? This mini altcoin season may come to an end. We'll just have to see. All right, so there's a famous thing that I know you guys heard of before, Goldman Sachs, and one of their chief analysts or strategic advisors, he's not only dissing Bitcoin, now he's dissing gold. It seems like this is reckless, and it seems like Goldman may be really threatened right now. Maybe they know that their investors are quite smart and doing their own homework and realizing that inflation is coming and they need to diversify. They need to buy hedges or stores of value, right? And this Goldman chief is like, no. You don't want to do that. You want to leave your money with us to invest with because we're going to make the most gains for you. But don't put any money into Bitcoin or gold, which I think is really, really reckless. Now, why does he think this? Well, according to this, he says that gold is only appropriate if you subscribe to the theory that the dollar is on its way out as a global reserve currency. I don't think that's it at all. It doesn't mean that the USD will lose, its status as the global reserve currency. But there's no doubt that the USD can devalue and inflate. We see that every year. And this year and the next years are probably going to get a lot worse because of all the trillions that's coming out there, right? So I don't buy this at all. And I think this is reckless. I think if you're a good portfolio manager, you want to be diversified. You want to be prepared for anything that may happen, such as inflation. So you should be buying some Bitcoin and gold. Even if not Bitcoin, at least gold, right? But yeah, I don't know what he's really thinking. Well, probably because Goldman is scared. All the customers, they're asking for Bitcoin and gold and they don't want to provide it. They want to just take their money and invest it. And that's probably not happening right now. All right, lastly, I want to talk about Max Keiser. This is the Bitcoin bull that I mentioned. He, of course, is he's a Bitcoin billionaire. He invested in a lot of things like Kraken and Bitstamp. He's well off, but we know he talks about Bitcoin a lot. He truly believes in it, and he thinks that the 20,000 level for Bitcoin won't pose any resistance. In fact, no resistance until 28,000, and then a brief pullback before going back up and eventually settling at $100,000. Man, that sounds good, right? I think how fast Bitcoin has been moving right now, it may be a precursor to what's to come, right? I do think 12,000 is right around the corner, and we actually did hit it and surpassed it yesterday, 12,200. And after 12,000, 14,000 is next. Once we hit 14,000, 20,000 is right around the corner. And once we break above and go into all-time highs, anything can happen, right? True FOMO will happen with retail investors, with institutional investors. It's going to be wild. It's going to be the Wild West because no one has seen Bitcoin at those levels, and we don't know. It might not stop at 28,000. It could continue on to $50,000. Remember, back in 2017, before Bitcoin futures were introduced, Bitcoin was going so much that I thought maybe we would have hit $35,000 by the end of December of 2017, and then futures kind of ruined that. But this time around, if we do go back above 20,000 or go back to 20,000 and go beyond, it's going to be wild. It's going to be wild. And I'm anxiously waiting for that moment, which could be right around the corner, guys. We had a proper shakeout yesterday. Does not mean the bull run is over. Make sure you guys follow me on Twitter, which you see in the bottom left-hand corner. Sometimes I make jokes, sometimes I'm facetious. I did actually tweet out saying that the bull run is over, it's time to buy gold. I was joking in case you guys couldn't pick that up. And make sure you subscribe to the channel and tune into my future videos and my live stream next Friday, 10:30 a.m. Central Standard Time. Take care, guys. Bye-bye.